Hey Devils, how you doing? Sam here. It's about 11:30 on the 16th, and we're kind of no. I think Powell is still speaking here, but I thought we'd give a visit back here to the S&P as things are happening so fast here. This is really remarkable to watch as we're seeing wave counts that often take weeks, if not longer, to play out or playing out, in less than 24 hours. It's really going to be fascinating to see how this resolves. And this is a very good example of an Elliott wave structure that's producing a probability event. Now, it's just that market is not obligated to do anything. But everything is happening here at a speed that we just don't see. So it's creating opportunity. So I thought what we might do here is look at a potential trade here, because this is, given the volatility, this would be very high risk to be taking anything overnight. Even the day trading is just obscenely high risk because the volatility is so high, right? So that, now understand, right? Traders love volatility, but intraday is very, very, very high risk to be trading this. But we do have an Elliott count here that has produced a probability event. So I'm going to propose to you the account that I think is going to be interesting to see how it plays out. And then perhaps, I'll show you how I would trade it. And it would not be in the futures market. I would do it through options. And this kind of ties back to, here's a long lead in, to our little promo that we're doing here. So this is the Devil survey that we're going to be putting out. I think we're going to go out. It's going to go out at the end of the week. Now, this will be an email survey, right? So I apparently haven't done a very good job of explaining this. So we're going to send this to anyone who would like to participate via email. So existing members, there's nothing, you have nothing to do. You're already going to get this in an email from us. If you're a YouTube sub and you're not yet a member of our community, and again, by member, I don't mean a paid plan. I mean, if you come over here to TradeDevils.com, you go plans and pricing. If you would like to participate in this, right? Again, no obligation. We're giving away 0.05 of a Bitcoin, a month of education, a month of social. So this will be a random drawing, right? The only way to participate in this is to come over again, right? I don't want to discourage you from a paid plan if you're on the fence, but if you'd like to participate and you're not yet ready for a paid plan, you would join the free plan, right? There's no credit card, no obligation, nothing happens here other than you will register with a name and an email address. If I click, all right, so I already have an account. So your email and a password gets you in. Now that will drop you into our Discord. So there is benefit to that. Or of course, you'll get access to all the crypto deep dives, the white belt, right? As I've mentioned many times. There's plenty of content there to dig into. That's 4 hours of content. But if you'd like to participate in the giveaway, again, the requirement is that you receive an email from us and that you participate in that survey. Again, what kind of things we're asking? Diversification across assets, relative account size, right? We're not trying to get into your panty drawer. We're just, look, you count $5,000 or lower, 5 to 10, 10 to 20. That's the range we're looking for so that we can more precisely dictate create the new content for the largest percentage of our membership or even our YouTube subs so that you can participate. Right, that's all we're after, right? We're not going to spam you. We barely have time to send out an email, so you're not going to get blasted with a gazillion emails from us. I promise you won't. So there you go. All right, back to the S&P. All right, let's go look at this. So what makes this so interesting is that we have a 5 and a 5. All right, so let's see. I did it. I think last Thursday we did a look at the S&P, and if I pull out here to a 3 hour, there's of course the conundrum here of this sell-off here, the COVID sell-off can be interpreted as an ABC or as a 1, 2, 3, 4, 5. If it's a 5 and this is the bottom of a correction, and now we're going impulse to take out the new highs. Well, again, as we've shown this many times before, you have to accommodate that by calling this a very large expanded B wave. The 5 down is the C, and then coming up off this low, this would have to be impulsive. Now, again, just like this 5. See, this is what's so interesting here, is that this move down here, if I can get this thing hot, this move down here and this retracement is happening on a microcosm right here, right? But I don't think you have the same ability to interpret the initial move down as potentially an ABC or a 1, 2, 3, 4, 5. I don't think we have that flexibility here. So if you're going to be disciplined about the wave structure here, there's a probability event that's just been created due to the fact that we just have back-to-back 5. So let me go back here and we'll look at this. So I do not think there is any Elliottician who's got any clue at all is going to try and interpret this as 3. Really, the only possible way you could interpret this as a 3 is to call this an A, B, and a C, right? Which would be some of the most distorted wave relationship, and just in context, right? Of if this were A, B, the C, very, very low probability. Is it possible? Of course, anything's possible. Market's not obligated to do anything, but this is a much more high probability 5 than a 3. Right, there's even a little baby, little leading diagonal in that 1, 2. You got to put the 3 here. It goes exactly 2, 6, 1, 8 here. So if we look at this to here, we go right to the 2, 6, 1, 8. We get a little retrace. So you have to play the extension in the 5. This is a 5 all day long. There is no Elliottician going to tell you, come up to at this point in time, going to tell you that's a 3. It's just not going to happen. So 5, and now what are we? Right, yesterday, another 5. Well, so the one thing I can say with certainty is that this cannot be, well, let me rephrase. This is likely not the end of the correction, right? For this to come down as a 5 and now us just to go balls to the wall here and go up off to new highs. Is it possible? Of course, right? Again, anything's possible, but the probability here, given the price pattern here, is low probability. So we have a trade potentially setting up here. Well, there is a trade here, whether or not you want to take it or not. But let me just show you. I'm kind of dipping my toe into the options market here to see if this is going to be, appealing to our members and subs, etc. Right? But this is not for, a $3,500 account, even a $5,000 account. This is too big of a trade. So with the volatility, this extreme, this is an option seller's paradise, right? So we want to take advantage of that volatility. So looking here, if indeed this is 5 down followed by 5 again, there is no Elliottician's going to call this a 3. It's just not going to happen. Okay, right, so if we've got a 5 followed by a 5, then we can use this pivot here because you can see the 5 that we put in yesterday. Well, some of this is this morning. If this is going to continue to go higher, right, which certainly it can, right? So remember, of course, the market is moving now. This has nothing to do with earnings, expansion. This has nothing to do with anything other than what the Fed is doing, right? So we have distortion of the natural rhythm of the market. But remember, Elliott Wave is not a measure of what's happening to the underlying. It's just a measure of how the market's moving, because this is fear and greed. Right? That's all it ever is. Fear takes it down, greed takes it up. That will never change. Never. Nothing doesn't matter. No algo. Nothing changes here. Fear, greed. Fear, greed. That's as simple as that. So given that, I think we can use this pivot here, since we've got a contender for a completed 5, as kind of a closeout point. So if you're looking for a short, now if this is going to be 5, right? So one possibility is that it's an A, and then we'd go up for a B before we'd come down, right? So if this 5 coming down, it's either an A or a 1, right? There's no. Again, I got to be careful of my language. Very low probability this is corrective, and then we're just going to go off and blow off these highs following this 5. Right? Again, it's possible, but low probability. So the 5 down followed by the 5 would imply that whether it's if you're a bull and you want to count it as an A, okay, well I can't follow an A with another A unless it's part of a B. Right? So we could clearly do that. Well, we could do this. We could have an expanded B. But the probability event that's setting up is a push down here. Now, we don't have to go visit the COVID lows, the March lows, but the probability of something corrective here is extremely high. Even let's go back to a 3-hour. All right, so again, it really doesn't matter how you, for the trade I'm going to put in front of you, it really doesn't matter how you count this, right? If you want to count, because this certainly, right, their Elliotticians are going to count this as a 3, 4, 5, right? There's no question about that. You could interpret it that way. I don't at the moment. I think we've done an ABC here, but it wouldn't matter. If this is a 1, and we've got 5 down. Well, we're still waiting for the 3 to give us a C to take it up, to now go up and blow out those old highs. If it's an ABC, well, then the probability here would be 1, 2, 3, 4, 5, and we're going down. If this is corrective, then we'd be looking to, that of course doesn't have to take out the lows, but something down in this range, 23, 22 range would be a reasonable target if that's what we're going to see here, right? Of course. All right, so I think the reason I think there's a trade here is because we can use this pivot as kind of an exit point. So if we break this pivot, then the idea that the 5 is complete here is invalidated, and then perhaps that's going to be, boy, that's going to be, well, I don't even see how you'd count that, right? So because that's a 5, we can't be finishing here because it's coming off of this. Again, if it doesn't matter if it's 1 or a C, it doesn't matter, right? It's 5 down. So we cannot finish a correction with a 5 unless it's part of an AB, unless it's the C leg. So we can use this pivot here as an exit point. So given the high volatility, let's look at selling. So my view is I want to sell volatility up here. So in this range, I want to sell the out of the money calls here, and I want to use that to pay for some at the money puts on the assumption here that we are not likely to go up here and break this pivot. So if what we're doing here is just the retrace of that initial sell-off this morning, it does imply this, right? So this movement here, so what do we got here? Oh, to the high, you've got, we got 150 ticks, so 37 points. So it's bigger than you think, right? To get there, it looks like it looks like it's going to be there tomorrow by the end of the day, and it certainly could be. All right, so if I'm trading this in the options market, I want to sell out here and I want to buy at the money. So I just put this together here as a simulation so you can see what this would look like. So my view here is, again, this is an option seller's market because of the high volatility. So I want to sell up above the market and I want to buy at the market. So if I'm selling above the market, I want to sell the 32.20 and I want to buy the 32.30 because given the vol, I certainly don't want anything that's unhedged. Plus the margin would be extremely high to sell anything unhedged, even though it is above the market. So for that credit spread, approximately you're going to get 375 for that. Okay, so that's selling the 32.20. So if we come back up here and look at this, well, the 32.20 is right about here at this where this algo target is here. So let's be more precise here. There's 32.20 to 32.30. All right, so here's the sell. We're selling here and hedging it here in case it just blows right to new highs, right? And this all has to be reevaluated. That will be interesting to see how we're going to count that. So we're selling here, right here, so we can buy close this, looking for some sort of movement down here. But again, I want to hedge. I don't want to just buy a put because volatility is so high, so I want to take advantage. So I want to create a put spread. So I would do it this way. I would sell the out of the money 32.20 to 32.30 spread. You're going to pick up approximately, right? It's, depending on when you look at it, about 375. And I'm going to use that. So you get about a 1-to-1 purchase here. So I can buy the 31.05. Now note here, look at the difference. I'm selling 5 to buy 1. So I would buy the 31. I should mention here, I'm doing this in July. So these have about 30 days. So you want to get the time decay coming out of the options you sold. And so I'm selling 6 and I'm buying. So I'm selling 6, buying 6. So you're getting that because it's 5-to-1. I'm using that to get into the trade for no out of pocket, right? So the risk is all going beyond that pivot. So if we go beyond this pivot, I'm out of the trade. Right, even though it looks like, hey, man, it's going to get there today. If we break this pivot, we bail into the trade. So that pivot is right here is 31, let's call it 31.60, just for round the numbers here. So if it gets to 31.60, let's get right to 31.60, right in this range. You'd be down between $250, $300, right? So for a 10K account, there's 3% of risk right there, right? So this is not for a $5,000 account. Really, I would say this is 10K and above. Ideally, this is for a 20K account. So it's just so the risk dynamics here. Now, yes, time works for you, so you could be here at a loss and be down $300, but as time decay works for you, that could end up being a winning trade. If we get down here, your max upside here is about $1,000. So you want to look at this as you're risking 3-ish to try and make $1,000. Right, so that's how I would approach it. Of course, you're capping your downside via the put that you're selling. So you're selling the out-of-money call spread to pay for the put spread. That's how I would do it, right? And I would use this pivot here. If we break that high, then I want to be out of that trade. I'll take the small loser at that time. Now, this is always the danger with options. The danger of this is that because you know that time is working for you, that the market starts going against you, and you're like, oh, okay, well, I've got time. It could come back. It could come back. Right? That is the number one problem. And I've been an option broker for 10 years. I've seen more people make that mistake than any other mistake in the market. They say, oh, well, it's all right because I've got time. That time decay is going to kick in pretty quickly. Okay, it's going to work out just fine. I still got that time decay. Now you're down $500-$600, and you got a 5K account. Even a 10K account, right? It's 5-6% of your account on one trade, right? It's an easy mistake to make, right? So as a trader, you're always optimistic, right? Oh, it's going to work out, right? I know I'm right. I know it's going to come back down. Can't go that high, right? I know I had 2 5s. It can't do that. I got a 5 followed by a 5, so it can't do that. Market doesn't have to do anything. It could be here. It could be here tomorrow. So keep that in mind, right? That's just one. So I show you that kind of as an example. Is this direction that we want to go, right? So I'm speaking both to members and to subs. But until I get some feel for what kind of asset diversification, is there even the interest in this, right? So vast majority of our members and subs are interested in crypto. Is there enough interest here? Because this is a lot of content to produce to try and teach how to do that. Right, you got to understand everything that's involved in options, and there's a whole lot here, right? I'm kind of simplifying here without taking you through understanding all the Greeks and everything else that's going on here. So we just want to gauge the level of interest to get into this because this is a very deep dive. Now, it's not that it's hard to teach, and it's not that it's hard to learn, but it takes effort. You got to invest some time and energy into this. Right? So again, thus the whole thing comes back to. This is why we're bribing you to get that information. 0.05 of a Bitcoin, random drawing, likely be done on Friday. If you're interested in that, all you got to do, come over here, just free account. All right, guys. There you go. All right, talk to you later.